Good evening, and thank you very much, firstly to Finbar for the invitation to speak tonight. It's always good, especially to see so many first home buyers here tonight. The main part of this is just to give you as much information as we can tonight. In your packs, I've actually got, there's actually a handbook, which is effectively just some notes, etc. And if you want to jot down some ideas or some questions, etc., questions at the end. Okay, so a pretty old photo of mine, but basically I've been banking and mortgage broking for about 20 odd years, so sort of built up a fair degree of knowledge, etc. The main part of my job at the moment is dealing with a lot of first home buyers. Really enjoy dealing with first home buyers, especially the education piece, where we're trying to educate as much as we can so that they make some good decisions and hopefully have some good outcomes. So what do I want to buy? So David and Cara were talking about before about apartments and these sort of things. So, what is best for yourself? And obviously this is a personal choice, but, whether you want to be living close to the city or near the beach or whatever like that, that all comes down to affordability. What are your goals? We see a lot of first home buyers at the moment buying into the property and then again rent the property out after 6 or 12 or 18 months. So you need to understand, what you're looking for. Are we buying established? Are you going to buy a new property? Obviously tonight we're probably trying to put you into a Finbar property at Palmyra or something like that, an apartment, and a house and land package. Obviously a house and land package at the moment, there's not too many house and land packages you can do in the city, so we have to venture right out, and as David was saying, there's only 150 kilometres of coastline, so where are you going to be putting these houses? So each scenario of every client is different, so it depends on what you're looking for, and then really about making choices for yourself, and hopefully you can find the right property. So the biggest question we get all the time is how much we can actually borrow. And I have this thing with two words, with borrowing capacity and buying capacity. So obviously borrowing capacity is how much you can actually borrow. It's fairly simple, but a lot of you might have actually jumped already onto one of these online calculators and sort of put in your income and those sort of things. And a lot of the times, the borrowing capacity that you put in through there is a lot higher than what you can actually afford. We're finding at the moment the clients, the expenses is actually being really looked at and scrutinised by the banks. So if you're going to be putting in just your income and no expenses, then that's going to give you a sort of a very large figure. But you've got to determine whether or not you're going to continue on with those expenses. Even to the points now where the banks are looking at accounts like, or expenses like Netflix, gym memberships, these sort of things. So if you're factoring in how much you can borrow and you're not prepared to give those sort of things up, that's actually going to limit how much you can borrow. So we're here for obviously a first home buyers seminar, and so the first one obviously is going to be the first home buyers grant. The first home buyers grant is still kicking along. It's only really mainly for established. Well, that's the $10,000. So first home buyers now can get up to the $10,000. That's been like that for the last couple of years. But there are stamp duty concessions on established properties, or established and new. So does anyone have an idea about the value of what the property price can be up for no stamp duty? Any takers? $430. Well done. So for properties up to $430,000, there's no stamp duty at all. All right. Now that cuts out, the concession cuts out at $530,000. So it works out to be about $969.60 for every $5,000 of property over $430,000, for those inclined to know that. The REBA grant, so this is actually something that probably gets forgotten a lot by a lot of first home buyers and a lot of buyers especially. It's a grant given by the government, and it's actually up to $2,000. And it's a refund of things like application fees if your bank charges one. There's things like settlement agent fees that you can get a refund. There's also building and pest inspections that this can actually cover if your settlement agents and those fees don't make up to $2,000. So that's something that a lot of people get, and it's for free. You just need to apply for it after settlement, and it's money for jam. The Super Saver, forgot to mention, there's actually quite a few flyers and brochures in the packs that have actually made up, so have a bit of a read of that. But the Super Grant is effectively, the Super Saver, is actually an initiative by the governments to actually try and encourage first home buyers to save money. So you're allowed up to $15,000 per year to contribute into your super, and that can actually be salary sacrificed as well. So have a bit of a read of it. Again, like David, I can't give you any advice in that sort of regard, but have a bit of a read. Happy to take calls on that sort of stuff afterwards. But that's a very good initiative by the bank. The government, sorry. Whether it's going to kick in to help you right now, I'm not too sure, but that's an initiative now. How much do you need to save? Well, that's going to depend on a lot of things. I'll get to postcodes and the mortgage insurance a bit, but it's really about the more you save, the more you can borrow effectively. But the more you save, the less loan you have to borrow. All right, so it's actually a good idea to try and save up as much as you possibly can, obviously. The bigger one at the moment we're doing a lot of, which is assistance from a guarantor. So this is where I say this is assisted borrowing. So if you're in a position where you don't have, and we'll go through a couple of slides with this one as well, but if you're in a position where you don't have a deposit, or you've got a small deposit, and you've got a very nice parent, so any parents want to get rid of their kids out of their property, just need to go guarantor. But it's a way of adding equity into the deal, right? And some of the benefits of it is it allows the client or the buyer to buy today. It also removes the requirement for mortgage insurance, so there's actually no mortgage insurance whatsoever. And generally you'll get a better interest rate, better terms, etc. for your finance. So it's become an option that has actually allowed a lot of first home buyers into property. There's a few downsides, etc. Especially if the parent wants to sell their property or those sort of things, or the first home buyer forgets to pay their loan repayments or whatever. So there's a few plus and minuses, and it's something that we can actually look at. So the lender's requirements are just getting harder and harder and harder at the moment. There's a little Royal Commission thing that's been happening over the last 6 months, and there's been a fair bit of pressure on lending requirements. The banks are restricting what they can lend, certain areas, but they're being very, very mindful of expenses and making sure that they do look through all of the expenses. We're now having to look through bank statements to make sure that if you do have a Netflix, we ask the question. If you do have these things, we have to ask the question. So the requirements of the banks has actually tightened up significantly. Same as the lending criteria is increased, so that's actually having a negative effect sometimes on what you can borrow. Postcodes is a big one. The banks are basically now starting to look at postcodes in relation to how they perform, and so they're lending less and less against those. So unfortunately in the city areas like postcodes 6000, 6003, they're not looking to do lending up to 95%. But even in areas that like St James, as I was telling you before, there's St James, which is not considered to be an apartment sort of area. It's got a postcode of Vic Park, I believe, and they're looking at doing, some of the banks are only lending up to 90% for strata properties. So if it's an apartment or a strata, they're only looking at lending up to about 90% now. So there's all these restrictions. Lend to value ratio, it's actually supposed to be loan to value ratio, but it's actually a percentage, so I don't know why the banks call it a ratio. But the banks normally lend up to 95%. So that means you've got a 5% deposit. The best way of lending or borrowing money would be with a 20% deposit. So that actually would alleviate the lender's mortgage insurance. Coming to lender's mortgage insurance, don't be afraid of mortgage insurance, right? This is actually an interesting sort of topic, because it actually will give you the chance to buy the property today. So if you've only got a 5 or a 10% deposit, if you look at how long it would take you to save up the extra 5 or 10 or 15% deposit to avoid the mortgage insurance, what's happening to the value of the property? Right, so there are going to be restrictions on it. The bank, the mortgage insurer actually is the one who takes the risk, so they ultimately can look at taking the actual approval. But they're not that bad. But I've always said it for the last 20 odd years that mortgage insurance is actually a way of actually buying time. But if you can avoid it, by all means, but it actually isn't something to shy away from. Interest rates, with interest rates, we hear it all the time, they've been the lowest they've ever been, etc., etc. Where are they going? I can't give you advice on that, but I can't really see interest rates going up for some time. I think the Reserve Bank is going to be sitting on their hands for the next 12 months. But internally, the banks are starting to push up their rates as well. So there is this cost of funds they keep on telling us. I think it's just a profit to pay for the Royal Commission. I didn't say that. But at the end of the day, the rates are slowly starting to move up, but they're still cheap. They're still low. We have a 3-year fixed rate at the moment, on today being the 11th of July, at 3.79%. That is just ridiculously low. So if you're going to be able to afford a house, it's pretty much now, or apartment, but it's now. Variable rates are low as well, sub 4%. We've got, like the choice of banks at the moment. Mortgage brokers around town have actually got, the 30, 40 banks, etc. And that's to give the choice, and that's to put the pressure on the banks as well, to actually make sure they are pushing their prices down and keeping the prices or the interest rates relatively low. There's a couple of case studies that I've actually put in your workbook or your bag as well, show bag. And this is Claire. I don't think that's actually Claire there. But Claire's basically looking at buying a property for $430,000, so it's a brand new apartment. So she's eligible for the first home buyers grant, and the approximate fees are around $4,000, and so she's borrowing about $408,500. Now in your packs there, there's actually the interest rate at 3.99. It actually does tell you what the repayments are for these, so have a bit of a look through that one. Then we've got Jack and Kim, and again, I don't think that's Jack and Kim, but anyway, they're lucky enough to actually come up with a 20% deposit. Now, they didn't have all the money themselves, so this is where I call this as assisted lending. So Jack and Kim basically come up with the 20% by way of a gift from mum and dad, and they've been able to alleviate the mortgage insurance. Now, on a purchase of this at about $430,000, they're only borrowing around about $344,000. That equates to about $400 per week as a loan repayment. All right, it's pretty good. This is the one. Now Travis is basically having a guarantor. So he's only got $10,000. Now without his parents' support, he wouldn't have any hope. Having said that, I'll digress from this slightly. There is another lender which most of you may have heard is Keystart. Now that's actually a government initiative. Again, you can actually get into loans with only a 2% deposit and don't pay mortgage insurance. So there's some options in relation to that. So if you can jot that one down, I missed that one in this. The guarantor, so this is whereby mum and dad lend you some equity in their property. We need a mortgage over their property, but we split the loan off into two. Without getting too complicated, we're actually designing the loan so that we minimise mum and dad's exposure. So on this sort of guarantee here for $430,000, mum and dad really only have to guarantee $70,000. So that 70 is registered against mum and dad's property. Now when we're doing this sort of structure, we speak to Travis and say, mate, you've got to try and pay off mum and dad's loan first. So we try and smash that loan down. So these get reviewed every 3 to 5 years to try and remove the guarantee. As I said at the start, the benefits of these, you can buy the property today. Interest rate's going to be cheaper. And there's no mortgage insurance. So it's actually not a bad way. They get some negative press every now and then, but in my opinion, it's actually one of the best ways of doing it. Now, the biggest thing is when you're going out shopping and actually looking for a property, if you haven't had a look at your finances and that sort of stuff, how do you know what you can afford to buy? Whenever an agent, one of the first questions Robin will ask you, have you got finance approval or a pre-approval? If you're going to go out shopping and you're serious about it, my suggestion is going to be to always get a pre-approval. Making sure that that pre-approval is actually being checked and verified by the bank. The banks are trying to actually remove themselves from doing pre-approvals that actually gets verified. That's deposits, your funds in the account, etc. So that's one of the biggest things at the moment is making sure that the approval you get is actually rigid. Making sure you've got that. And other things in there, making sure you've got your settlement agent and those sort of things, which Robin can help you with as well. Time to find a property. One of the biggest things I say when I finish up with clients is actually the finance side should be fairly easy, and then it's a matter of just going out and falling in love. Falling in love with the property and making sure that the property you go and buy, you can see yourself walking into every day. Driving into that car park. So always sort of say just go out and fall in love with the property. Till I'll be 5. So just really closing, just getting a budget. Most people should be getting a budget. If you haven't got a budget, do as I say, not as I do, but get a budget organised. We actually have an ebook, and there's a lot of this information we can actually email you through. So I'm hoping we'll grab some emails, etc. If you don't get one, my card's in the actual pack, so give me an email. And just savings tips, basically trying to minimise your debts. When you're actually trying to go in for a loan, etc., keep your loans as low as they can, like your personal loans, your credit cards, all these, they do tend to work against people. And as I said, making sure you get that budget sorted out. That's just the info packs in our team, info packs there. So if anyone does want that pack, we'll actually email if you miss it. As I said, we'll get it to you. That's it. Thank you very much.